Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Here we are with another episode of Black and White Market Minute on Life Planning 101. Matt Ervin and Aaron Kennedy with you on a kind of a volatile week this week. Aaron, tell us what's going on. What are you seeing out there?
Kind of a crazy week. You know, not a lot happened. I think the market was down about 1% for the week, but it got way up there. You know, I think it was up 1.5% after the Great Britain news, and then it turned around and we ended up down. So it was very volatile. It was interesting watching how people are thinking. So it was pretty big news. England came out and said they've had enough. They can't do it anymore. They're really struggling against the U.S. dollar, having some currency weakness. So they turned around and started buying their bonds. Gives them more liquidity, kind of stabilizes things a little bit. But they were the first ones to really do what we've been hoping the Fed would do, and that is reverse course. You know, they are going back to QE. They are trying to turn the gas back on, give their markets some liquidity. And that's when the U.S. markets really popped. They jumped right up and say, hey, here we go. Here we are. if they're going to do it, we're next. Right. You know, and everybody got excited. And of course, that immediately flipped the other way the next day.
Right.
But it's very interesting because that is exactly what the market is looking for.
But domestically, right? We want it domestically.
You know, and we've been talking about this, that, I mean, this is a global world. This is a global economy. We can't really step out on our own and expect us to be the only one to do well in a very poor global economy. So, you know, there will be several countries that start to do this, and eventually we'll fall in line with them. But I don't think we're quite there yet. I think we got some other news, another inflation print, and it was a little bit hotter than we had expected.
Right.
So there's still a little bit more work for the Fed to do. But here's what's exciting, is we're all feeling it.
Yeah. We're
all feeling it. And I don't really care what the politicians are saying. I don't really care what the Federal Reserve is saying. We're all feeling it. Even Nike, we were talking about that this morning. Nike came out with some numbers that were not very good at all, and I think they're down like 12% today.
That's right.
And it wasn't absolutely horrible. There was some horrible stuff in it, but you know, they raised revenue. They sold more goods by about 4%. But here's where we got to try to figure things out. We have a very strong U.S. dollar, right? So if we neutralize that, if we say that doesn't exist, sale is a sale no matter what currency it's in, Nike actually increased their revenues by 10%.
Great.
Which that's pretty good.
Right.
You know, but they lost 6% of that to currency valuations, or the U.S. being so strong, selling in other countries and having to bring it back to the higher U.S. dollar. So that's quite a bit, losing 60% of your revenue growth just for currency.
You said 60 or 6?
Well, it was 10%.
Right.
The actual number was 4.
Got it. So
they lost 60% of their revenue growth.
Okay. I just want to make sure I was on the same page. That's great.
So something else, what's really got people freaked out is their profit margins dropped. And they dropped quite a bit. They dropped down to 44%, which is still an astronomical number, but it did drop, and that's really what's hammering the market. And we had this question the other day, but talking about inflation for individual companies. Well, Nike, what they're saying is why their margins are dropping. It's freight, inventory control, wages. Right. These are all things that, no matter what we see at the pump, if you go to that one pump designed for the diesel engine,
right,
it's still $5 a gallon.
The green one.
Yeah,
and
really hasn't moved.
I understood they had to lower too some of their pricing, offer some incentives and some sales, right?
Yes.
The people are wanting to move product, and we talked about that last week. I think it was Hobby Lobby. That was the one we went, and it was like they're already 50% off Christmas stuff. So it's not one company. It's happening across the spectrum.
That's right. Nike's inventory, that's the stuff on the shelves, or they pointed out it was at the docks or waiting to be delivered, or supply issues. But it's up 44%. They have goods out there that haven't sold that's 44% higher than last year. So Nike is a pretty big brand. Sports, athletic wear is a pretty big thing in our country. That's one thing that people will splurge on. And it's not good that Nike is increasing inventory. I mean, in the perfect world, you build a set of shoes or make some shoes and put them on the shelves, they sell.
That's right.
You don't want that inventory sitting there. You want it moving constantly.
Yep.
So it's either one of two things. It is stuck at the warehouses or the docks and it's not at retail yet, or people just are not spending the money.
Well, so this goes back to that good news, bad news, right?
Yeah.
So this is bad news for the economy, great news for the Fed. What we saw, was it yesterday, today, on some of those economic indicators, it seemed like the economy was doing okay. Terrible news for the Fed, right? When all this aligns, I think, we talk about it a lot, people are looking, they're hungry. They're wanting to find the bottom and go, but we've got to have direction.
Yeah, that's exactly right. Everybody wants this market to turn. It's really, really weird. People are getting more pessimistic, but anything that comes out, like England buying their long-term bonds, anything that comes out, everybody jumps in the market because they don't want to miss out. And we don't. This is
right.
This is kind of strange because people really, really want this to be done.
Yeah.
And this is one thing I wanted to talk about, was if the whole market is thinking one way, and right now this is what they're thinking, that the recession is coming, first quarter, second quarter of this year, there's no way out of it, and market's going down, and the Fed's eventually going to bail us out, and we need to be in the market before the Fed does anything.
Yeah.
Anybody you listen to, they say the same things. Well, that's good news. It really is. If everybody's thinking bad stuff is coming, more than likely it's already here.
Right, that's right.
And that's what I've been saying, is we're already in a recession. We can try to gloss over the numbers however we want to, but it's already here. And eventually it'll work its way through the economy, and then the economists will finally see it and they will say, yes, we were in a recession in 2022, and we wouldn't have even realized it because everything would have already turned.
That's right.
It happened in the past. So.
Right. Well, and that's important. And you made a couple of crucial points about get invested, stay invested. I just want to remind folks that we have places to be no matter where we're at in the cycle, whether we're on the long expansionary portion or whether we're at the top turning over or whether we're getting close to the bottom. We have a process for all of that. And so our philosophy is to get your risk right, stay invested. That doesn't mean you keep your foot on the gas going 100 miles an hour all the time, but you got to stay with that forward momentum. We're positive thinkers, we're bulls by nature. So like I say, this is, you're talking about PEs a little bit, getting down. I wouldn't say probably the best, but more reasonable.
Yeah,
right?
that is another very positive. The market is trading at about a 19 PE. That's good.
Right.
Historically, yes, that's high, but over the last 20 years or so, or at least since 2008, that's a very, very reasonable number. And it's starting to feel like a good time to be getting in.
Right.
If you're looking back 10 years from today, this will have been a great time to get invested.
Well, and to that point too, if you miss it by 5, maybe even 10%, one way or the other, over your life, over a few years, you won't feel that.
No.
It's a matter of having that faith for tomorrow. You need to get your cash right, your risk right. You can't escape the fundamentals and say this is the time. There's none of that. It is stick to the fundamentals, stick to the basics,
stick to the plan,
and go for it.
We don't want to see any big drops. We are trying to control our risk as much as we can. We do have a lot of money on the sidelines. At least 20% of people's money is sitting on the sideline right now. The way we are invested is we know this is a rough time, so we have a lot of quality in our company or in our portfolios. We want strong companies that can weather this economic downturn, and that's where we're hanging out right now.
Stewards of capital.
Stewards of capital. We're there. We're into some more of the value names, and this is the ideal place you want to be when the market turns around. You want to be in the cheapest companies from a multiple standpoint, from a PE standpoint, because they have the biggest bounce up.
Right.
Historically, that's what's worked the best. And we've got things built, where we survive a recession. We survive stagflation. We've got it all built in. And, regardless of what happens, the portfolio is pretty strong right now. We are outperforming the market. We're taking a lot less risk than the market. And more than likely, if we have another poor week next week, we're going to start deploying some of that cash.
Yeah.
Not all of it, but we are going to start nibbling, because this is good. We're down 22%, so why not take advantage of it?
That's right. Aaron,
It's getting exciting.
I hate to cut you off there. I love hearing about it. I know everybody does too. We get some great feedback. If you have something you'd like to hear more about or learn, give us a call, drop us a note. But for today, we got to wrap it up here on Black and White Market Minute. Matt Ervin, Aaron Kennedy, here on Life Planning 101. Thank you, guys.
Have a great weekend.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.